Well, actually, we do have a stable outlook on banks globally. And one of the main reasons is exactly what you mean, what you imply. So high interest rates mean higher revenues and higher interest income. Then, of course, there are other positives that we take into account in our stable outlook, especially strong balance sheets. Of course, that's on the backdrop of very gloomy macroeconomic environment. We expect many big countries having a GDP contraction next year, but the increase in revenues and strong balance sheet should offset those.
Yeah, I just find it surprising because from a capital ratio perspective, the banks are looking good. Profitability, okay, but getting better because the NIMs are rising. And credit quality hasn't deteriorated as rapidly as people thought it would have a couple of months ago. So I'm just curious to hear your view on how the credit quality side of things is going to pan out over the next couple of months.
We expect for 2023 a deterioration in asset quality, and we expect an increase in delinquencies. That's a combination of weak GDP growth or recession in some countries, and also high interest rates, which are positive for revenues, but also limit the debt affordability and the flexibility of borrowers. But the delinquencies will increase only moderately. Just to quote a number, we expect delinquencies from global corporates to be around 4.5%, which is much higher than today. We are around 2%, but not far from the historical average of 4.1%.
How do you expect the deterioration in asset quality and the rise in delinquencies to vary across regions?
Macroeconomic environment is a big function on those, and we expect more weakening, let's say, in countries like Germany, where the banking sector is more exposed to the industrial companies, which are more affected by high energy crisis, whereas less affected for those banking systems which are more skewed towards residential mortgages, prime residential mortgages.
We were talking a lot about China at the beginning of the show and the reopening story in China and Hong Kong. What does this mean for the APAC banks? How are you thinking about their strategies in 2023 with the prospect of China reopening?
Well, for China itself, we still have a negative outlook. And the reason for that is still that the macroeconomic forecasts are weaker than historical terms, and there's a weakness specifically on the real estate market and the property market. Whereas for the rest of Asia-Pacific region, the picture is quite similar to what I've mentioned earlier for global banks. So high interest rates will improve profitability, but balance sheets are strong, and delinquency will only increase moderately.
It's interesting that you have a stable outlook on the banking sector from here. Where do you think the upside risk could come from?
Well, the upside could come from a continuation, a stabilization of macroeconomic conditions, let's say at least, and also a normalization of monetary policy with probably a softening of high inflation.